You've been talking about this for quite some time, the need for regulation and the like. You've talked about stablecoins. You wrote about stablecoins. But I'm just curious what your immediate reaction was when you heard that the White House was doing this.
Well, Andrew, good morning. And my immediate reaction was this is necessary, it's important, and it's good that they did this, even if it's limited. And it's because it signals a couple of things. And if you don't mind, I'll just jump right into those. One is that digital assets, whether new assets or old assets or familiar assets being digitized, are here to stay. And it also signals that they're going to be regulated to the extent that they are financial products, investments, and the like, with the same principles, time-tested principles that we've had for a long time. Consumer protection, investor protection, stability, anti-money laundering, those types of things. And there's one very important thing that is in this order, and that is a recognition that technological advancement is important for the continued prominence of the U.S. dollar.
But Jay, in terms of just understanding, we were talking earlier, does this effectively say, okay, this is here to stay, that there's no putting the toothpaste back in the tube?
I think it depends on what you're talking about in terms of the technology. And you want to call it blockchain technology or some distributed ledger or some other term. The technology coming to the financial system is absolutely here to stay, including some form of stablecoin. I think we've all seen that stablecoin as a bridge from what I'll say the crypto new asset world to our incumbent financial system has demonstrated incredible power and scale. So that type of asset, that type of functionality, I believe is definitely here to stay. Whether a particular new crypto asset is here to stay or what value it will have,
right, does this say anything? Does this say anything about whether Bitcoin stays or goes?
I think what it says about particular assets is if they can demonstrate that they are functioning as people expect they will, whether it's an inflation hedge, a store of value, a transfer in a very efficient way.
But Jay, you just said something interesting. You said, do they function as they're expected to? That's a fascinating way to think about it, because
absolutely,
I don't know what you think Bitcoin is supposed to function as, right? Some people say it's supposed to function as an inflation hedge, in which case you'd say maybe not so much. You could look at it on the screen and that's where you'd land. You can look at Ethereum and so, I mean, that's the hard part. Function as they're expected to is a complicated way to think, no?
Well, it's how we think about markets generally. We think about today's price as a reflection of future value, right? And whether it becomes an established, let's just talk about Bitcoin, whether Bitcoin becomes an established inflation hedge, an established alternative store of value, or something else, time will tell. But the people who are investing in it today have a view of that for the future. That's for sure.
Jay, if you're right, though, about the stablecoin piece of this, doesn't that mean terrible, terrible things for the MasterCards, Visas, PayPals? Everybody loves Stripe, which is a private company at this point, but all of these effectively financial payment systems?
I don't look at it that way, Andrew. I look at it much the same way, and maybe it rhymes, maybe it's not exactly the same way. It certainly is a challenge, a threat. But was the internet a disaster for all retailers? No. Some thrive, some have done extremely well. I think that any kind of new technology coming to a large incumbent market, there are going to be people who adapt well, and there are going to be people who don't adapt so well. And so I expect some of the names you mentioned to be winners in this, and I expect some people we've not even heard of to be fantastic beneficiaries of this change.